have an exit strategy in mind. How do you plan on getting out of that that short-term loan, or that initial mortgage that you might have incurred if it was private? Perhaps you just needed to get into a property, needed to close quick. What is your exit strategy?
So when talking about residential and commercial, what else should the audience be aware of?
Well, I think there's a few things. Just keeping in mind that once you get into that commercial standpoint, it becomes up to the lender on whether or not they want to start basing the application off of your GDS and your TDS, or whether they look more towards your DSCR ratios, that debt service coverage ratio. So if you're purchasing in that 5 to 7 unit property, more times than not, it's either a newer or a less experienced buyer. So they may just follow the GDS TDS ratios as it gives it more of a concrete guideline to go off of. But for those more experienced lender or buyers, or when you're dealing with more intense commercial properties, like we mentioned before, having a good portfolio can really help bring strength to the application. So if you're new to the commercial field, maybe finding a joint venture partner, someone who has a lot of experience, they've built a subdivision before, or maybe they've built a couple 10-plexes before and they have that experience and that background. A good personal net worth statement comes into play a lot of the time too when you start dealing with these higher valued properties. So that can be something to keep in mind as well too, where moving towards that commercial, it becomes a lot less of a paper application, but a portfolio of history and experience to bring to the table. Pretty much a resume, essentially, you could say.
And most lenders, the old adage, cash is king. It's a very true thing. Having liquidity, or at least enough liquidity to be able to deal with anything that comes up, is really important for lenders. Of you having money in the bank to make those payments, especially now, COVID.
Mm-hmm.
We've seen a huge ramifications in the last few months just in regards to the deferrals on multifamily residential properties, and how the lenders are actually changing their underwriting parameters to deal with that. So it used to be 20% down for these B lenders to be able to purchase a multifamily rental property. They brought it down to 75% loan to value. So now that they kind of mitigated the risk a little bit, because the majority of their deferrals are coming from those types of properties.
Awesome.
Yeah. And then one more thing to always keep in mind too, and especially when you start moving towards either the BRRRR strategy with that renovation and refinancing and the building of a property, is have an exit strategy in mind. How do you plan on getting out of that short-term loan, or that initial mortgage that you might have incurred if it was private? Perhaps you just needed to get into a property, needed to close quick. What is your exit strategy? And that's something that we want to talk with all of our clients beforehand as well too, because when you expect a bank to come out with some takeout financing, or to come in and give you your permanent mortgage, if you don't have a route to get to there, that initial lending may not happen, because that is a risk for that initial lender. So always having a good exit strategy in mind is a very key aspect as well too. So.